Greetings, everybody. This is Jeff Scott. Apologize for the late posting of this. Sometimes life gets in the way of doing these things. And speaking of that, I'm probably going to slow down the frequency. Folks know that I do this as a, I guess, in the words of a famous IBD group person, unpaid volunteer. And sometimes life stuff will get in the way. And I've got a live meeting in a couple weeks and busy travel and work schedule the next couple weeks. So I probably may be a couple weeks before I do this again. Now, if I do get some time and I post something, then those that get notifications from the HGSI board or YouTube will get them from them. So market breaks. Is that a one-day wonder or something worse? Futures are down quite a bit, although not massively right now. I don't think it's a one-day wonder. We'll take a look at whether there's anything that shows that we might have a bounce in the next day or two, although not to say that we're not going lower. Disclaimer, this for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I'm not affiliated with any software company or vendor. Everything I use, I pay for myself. Trading involves risk, and you alone are solely responsible. In the essence of time, I'm not going to spend much time here except to say that I consider my trading a blend between Cancelim as taught by O'Neill and proved by others, John Person's techniques, published mentoring, teaching, training, as well as his indicators, position sizing from Van Tharp, although John's stuff overlaps quite a bit, and then a little bit extra spice from my buddy George Lee from Western Canada. I have a lot of different programs. I frankly only use a few of them, and these are the ones here, and we'll tonight use TradeStation, Thinkorswim, we'll use HGSI, and I'll show you some screens from EdgeRater. This is HGSI's website. Again, I am independent, not affiliated. I do not get commissions. If you're interested in a free 30-day trial, if you're coming to my live meeting, I highly recommend it. You click on the free 30-day trial area. You don't even need to give a credit card. And if you're coming to my live meeting, by the time you go home, you'll probably want to keep it and you'll be using the program on a regular basis. Under investment strategies, where my arrowhead is, a number of folks that contribute. The best is Ron Brown. He does something frequently, if not almost at least weekly, sometimes more frequently. Teaches you how to use the program, and he has a style of investing. And then you'll see a bunch of things from me as well. Won't have to say this much longer. Coming up on the seminars, John's is Saturday, Sunday, and Monday, September 24th, 25th, and 26th down here in Palm Beach Gardens. I'm going to hold a one-day seminar on the 23rd. If you're coming to John's, it's only $300. If you're just coming to me, it's $400. I'll basically be reviewing and showing you how I do the things I do in this webinar, how to use the tools that I use, how I incorporate John's stuff. But why would I want to teach John's things when John's going to be teaching the next 3 days? So come for both. Stock patterns are cyclical. If, Friday certainly looked like we broke down and we're heading down. Now, the question is, how much is this going to be the 2007 and 8 all over again, or is this going to be a minor correction up to 10%, moderate correction? I can't tell you that. I'll show you some things that have me worried. And I'll show you some signs that short term we probably have a bounce coming, maybe not to Tuesday or Wednesday. Since we are at this stage here, and we saw that at the open on Friday, I responded by buying contra ETFs, which I'll talk about some tonight, buying some puts and financing them by selling some out of the money calls. I do short stock, and I've had a TLT short position, which finally went into the money nicely. But I typically buy contra ETFs. I like to, in fact, I like to buy options on the contras, but you have to buy them when they're cheap and sell them when they're expensive, or else, they just don't do anything. And when the contras start to move, the options start to get expensive. So I was fortunate to have been sitting in some SOXS, SOXL, some DRIP, and some VXX, which were all pretty much were at the money and underwater positions. because of the premium drain. But it was nice on Friday for them. Frankly, Friday was bad for everything else. Natural gas, restoration hardware. I mean, there's a handful of patchy because they found some new potential reserves. Wind resorts, which have been hammered, now moving its way up. But pretty much, Ian used to call this a sea of red. If you look at the major markets on Thinkorswim on a daily, upper left is E-minis, middle is the NQs, upper right is the YMs, the Dow futures, TFs in the lower left, then the VX and the dollar. And you can see the strength. We're in the bad things. The VX going up, more volatility, usually is when the market's going to fall. And strengthening the dollar, it can also be a problem for U.S. stocks. To be truthful, though, the dollar still has a big way to move before I'll totally buy that the dollar is going to be a headwind. You can see the massive sell-offs and these little yellow arrows that are occurring on Thinkorswim or John's PPS sell indicator, showing a clear change in trend and moving on the major markets. And they're all breaking through the 50-day moving average, worst on the YMs. So a lot of damage on the dailies. On the weeklies, not so much damage, but clearly almost evening star setups across the board on the, again, the E-minis, NQs, YMs, and TFs. Evening star, I'm being judicious on it, where you had a sort of a gap up, a spinning top on Thursday, and a big move down on Friday. I can't tell if they're real evening stars or not, but they're certainly not a bullish formation, I can tell you that. When I just look at this from far away, your first period of support is going to be those 50 weekly moving averages, which is very close to the 200 moving averages. We really don't want to put the, let me make sure I got this right, 17, yeah. Yeah, these are the 50 weekly, or the first ones are the 17 weekly, which we're pretty close to already. These are the 50 weekly. So one would hope that the green line, which is the 17 weekly moving averages, will act as support. My guess is we're probably coming down and testing the 50 weekly, but we'll see. That's just a guess. We'll look at HGSI a little closer. And then just to show you what's really going on a bigger picture, this column is the E-minis, then comes the NQs. Oh, looks like I doubled the NQ there. And then these are the YMs. This is supposed to be the TFs, but I must have hit the wrong button. But the point is, you could see that we've now gotten sell signals on the weekly across the board as well. A little bit of color to what I see going on. TNX, TYX, 10-year and 30-year Treasury bonds continue a slow move up. Now, yes, they've moved up. Yes, that's caused a major drop in the bonds. But this here is like their lowest ever numbers. They're minimally above their lowest ever numbers. I think it's more of a concern that the Fed is going to start raising, if not this time, probably November. And that across the world, one gets a sense that there's been a reduction in the amount of the reduction in the intent of easing going forward. And Draghi and the EU, when they made an announcement this past week, they didn't open the door to increasing the levels, and I think that's kind of what spooked the market. AD lines, you got to roll over from someplace. They've started to roll over just a teeny weeny bit, but they're at highs. If you look at stocks above the 200-day moving average, this trend line here has been, we've reversed each time when we got too oversold. We're still above that line, which is kind of interesting. But we definitely came down. The 40-day moving average is down in the lower part of the pattern, meaning the number of stocks trading above their 40-day moving average has dropped considerably. If I look at the 3-month new high, new low zone, this one's kind of interesting how fast things can change in one day. Last week, we were about where this green arrow was. and almost like clockwork, and this is the level that we reversed to the downside. In one day, we moved down to less than 6% of new highs versus new lows, and this is the lowest we get. And so we're actually quite close to a reversal area. So again, if you want to be a believer that a reversal is going to happen soon, this might support it. Daily McClellan, S&P broke, so did the oscillator and the summation index. You look for extremes before you see reversals. We're not anywhere near extremes. The weekly also broke below zero. This market felt horrible on Friday. Part of me believes that this is the start of something new and start of something bad. Who knows? We'll see what happens at the close tomorrow, not at the open. I've alluded several times to the futures. I looked a little while ago, and just curious, I'll check on my phone. And my phone says that with a little bit of a delay, the Dow futures are now down 100 points, which is minus 125. S&P futures minus 14, NASDAQ futures minus 33. I went into the weekend with a massive short position, or massive, well, I'm long short ETFs and short long ETFs. But I don't think I'll end the day as massively short on those, because I really do think that we're going to bounce, and partly is because of this curve here. Buckets, another reason why a bounce is probably closer than not. 76% of stocks in the S&P 1500 are trading below their midline and their Bollinger Bands. And most important, 35% of the stocks in the S&P 1500 are below the lower band. Stocks don't like to live below the lower band. They spend about 7 to 10% of the year above or below, so 3.5 to 5%. And when I start to see 35% of the stocks below, history would tell me, especially in this bull market we've been in, that we got a reversal coming within 48 hours. Now, I'll also tell you that in a couple of the steep corrections that we have had, that hasn't worked. So I'm not going to bet my farm on it, but I'm going to have my finger on the cover button on some of my shorts. Now, the Hindi has not fired. I've talked about the Hindi every week for 7 years, so I'm not going to talk much about it now. I look at the Hindi on the All NYSE, which is how it's designed, also on the Russell 3000. The challenge now is we just don't have enough new highs or new lows. I need them both to be above 2.2 for this to be in effect, and that's what's keeping us there. We do have a rising moving average still. The daily McClellan's less than zero, and the new highs are greater than twice the new lows, but their absolute number is too low. We've got 3 out of the 4 necessary items fall on the NYSE, 2 out of 4 on the Russell 3000. This one is another ominous picture. This is the Woody indicator. And you can't tell perhaps in the video, but the reds and the blues here refer to a kahuna. A light color is a move of 0.24, blue to the upside, red to the downside, and a dark color is a move greater than 40%. You don't see greater than 40% moves very often. We had one across the board, and we had things move from above to below in a single day, and this triggered over here in the third set a Woody sell indicator across the board. Look at the last time this happened was in June, and we had 3 or 4 days of grief, and then we got a series of blue kahunas, and the market ultimately moved back to a bullish stance. So typically when I see this big of a move, we bounce. So put this into the feather of the bounce camp. But I didn't say tomorrow. And then the canaries, which I like to look at as sort of a symbol of whether or not this market is giving up the beast and is going to roll over. Leading stocks, we're going to have to take out LinkedIn at some point, and I'm not sure I'd consider Tesla a leading stock anymore. But the key message here is that, number one, the green bongo weekly is intact, which is my weekly buy signal, and we haven't yet taken out the 50-day moving average. So the canaries are bending, but not broken. Know your news and EPS this week. Lots of economic numbers, PPIs, manufacturing, CPIs, Michigan sentiment, energy prices. So lots of market moving news there. And then on the earnings front, not so much. I'm looking Hain Celestial, Lakeland Industries, Oracle. You know, there's a couple that may be important to you. Just know when your earnings dates are. Market thoughts. We had the worst day Friday in months, if not longer. Central bankers signaled an end of additional easing, and U.S. Fed speak pushes September hike idea, leading to raise in rates and steep drops in bond and equities. There really was nowhere to hide except the contras. But we've been in a quiet market, and I could tell you, whenever I've decided to go short, especially over weekends, I've covered quickly, because a boring market is not a market that rewards the shorts, and we've had a boring market. You know, you might wonder, well, you know, I haven't been that bearish. I think I've been cautious some on these calls, expecting the market to go up. I had a fairly significant contra position. One, because we're going into September, and two, because the VIX was so cheap. I was able to buy options at the money for pennies. And so all of them were underwater when I went to sleep on Thursday, and all those positions are nice now. But it's been a tough market to be on the short side. Think of TLT. I mean, I've been short since 140, 142. And this just done nothing, despite everybody in the world knowing and saying it was a big bond bubble. Typical agenda, top-down review. Not going to spend much time on individual stocks to the long side because, frankly, there aren't that many. Charts of the week. I'm not going to present one because I think we're going to see a market direction change during the week. I don't know when it's going to come, so it's too hard to predict. But I will tell you that on my Amazon trade, we did this trade 2 weeks ago. If you go back, you'll see I put in buys and sells. The buy was at 770.25. My stop was at 788.25. And as my rules are, especially in this market, I take off half when I hit my stop. That triggered. I would have moved my stop to break even. We haven't hit the stop yet, but you know, Amazon's one that maybe I should have left my position on. But I got to play by the rules I set, at least on this piece of my holdings. Cyber, this one was frustrating. Good call. Stock took off. It got within pennies of my target, and then it reversed. I took that reversal as a signal to get out, and I covered I took my position off. I think I had some calls that I sold. Stock has traded down, and you would have been stopped out on Friday. Again, fall meeting coming up down here in sunny Palm Beach Gardens. Hope to see you. HGSIdoc@gmail.com if you have any questions. So not quickly, but let's take a look at the market. Let's look at the futures. E-minis. So remember, I look at 5 different things. I look at these to give me a sense of what's going on in the market. I look at 3 time frames. I actually keep a score that I don't really share because it was a lot of work, and it's still not something I know if it's even meaningful. But very quickly, I look at the direction based upon the John Person buying selling indicators. And here we have a new sell signal that came in on Thursday on the E-minis. Last week, a week ago on the weekly, still in a monthly buy. The second thing I look at is the color of the paint bar. Elder uses red as a short or hold, green as a okay to buy or hold, and blue sort of free to do whatever you like signal. So we got a red, and a blue. So that's clearly weakened as well. Third thing I look at is relationship of price bars and the envelope. This is an Elder envelope. Because this is what happens when you get too far below. You get a major rally in the opposite direction. So I look at the E-minis. Part of why I think we could see a snapback sometime early in this week is that we've already popped below the lower band. Now, being at the band can happen for a long time. So if we get another down day and we start to look like this, then I'll be looking for the reversal day coming in. The fourth thing I look at are dots that would simulate MACD divergence. Here are some MACD divergence dots here. Here were some more over here. They fire often a long time before the stock rolls over. And they're just a warning sign. They're not a hard move sign. And last week I talked about the high jump bar. When I start to get above 90 to 95, I get concerned. And you can see the high jump came down to 59. So we're in a sell signal on daily and weekly with red bars. This is weak. You shouldn't be building long positions with the market looking like this until it starts to give a reversal. That's the E-minis. The NASDAQ futures, which would be the YMs. I don't have them in this group. I could fix that. Let's make that insert a blank row and go at YM. So the Dow futures. Broken record, same exact thing, down to 58%. NASDAQ 100 futures, not below the auto envelope, but red daily and weekly with clear-cut sell signals. And then the TFs, which are the Russell futures, again, not below the auto envelope, hasn't gone to a red paint bar on the weekly, but clear weakness across each of these. If I look at the dollar is still in a sell mode. It did flip to green on Thursday and blue on Friday, so it went to green during some of the Fed speak. You look at the VIX. Oh, don't you wish that was a stock you owned? Of course, you can own the VIX, and you own the VIX by owning something like VXX, which I think is probably, let me put that over here. Take a look at the VIX. We'll get to VXS later. So VIX is the strongest thing I've shown you. Notice these green dots. Those were showing some bullish divergence, suggesting that we would rebound. We had a buy signal come in on Friday. We were in a buy signal on the weekly, and we've got green bars throughout. The monthly still in a sell. I don't think I've shown you something that looks good. If I have, we may not be in agreement. What else can I show you here? I could show you, did I show you the dollar? I showed you the dollar. Oil. Oil had a move up. It's now pulled back. It's in a weekly sell signal. Interestingly, it's in a monthly buy, still a daily buy. If oil moves up, maybe that will lift the market. And then, I guess that's enough. And the dollar, you could see on the futures, is down a nickel, and the euros are up 0.08%. Now, the next thing I like to do is look at the sectors very quickly, and I think we can figure out the sectors aren't going to be pretty. Healthcare. Sell, monthly still in a buy, red bars. Healthcare looks weak. Financials, a new sell signal came in Friday after some bearish divergence. Still blue in a buy on the weekly and green in a buy on the monthly. I would say finance looks a little bit better than healthcare, and I might expect that because raising rates could be good there. XLY, consumer discretionary, big drop this week. You could see enough to push the weeklies into a red signal as well. Technology, a new sell signal. Blue on the weeklies, but a new sell signal. Industrials, a new daily, weekly sell signal, still red and with red bars. Staples, what had been strong, hammered. Now, do I think staples are a place that you might expect to see a bounce soon? Absolutely. That's about as low a high jump score as I ever see. So staples have really corrected much, and you could see they're in a sell signal throughout. Now, the fact they're in a sell signal, maybe it goes on for a little bit longer. Materials, another thing that's been doing well, sold off. I think this is a Friday sell signal on both the daily and the weekly. Utilities, Maybe it's a place to hang out and be safe. Not so much. New sell signal on the daily and the weekly. And what about energy? Energy, energy is in a buy signal. I think it's probably the only thing that's in a buy signal short term. So energy, the strength, and finance. Things that have been strong like biotech also gave it up. So I mentioned some contra ETFs. Let's just take a look at a couple that I'm doing. I could be long SPXS. Oh, I am long SPXS. And again, this was one of those, I can tell you what I had. I bought 3 weeks ago when the SPX was about $12. I bought a significant position of September expiration, which means this coming Friday, of SOX 12 puts. So I bought it at the money, 12 calls rather, because these are contras. I bought 12 calls at the money for 30 cents. They're now worth $1.10. So one good thing to say is they've gone up they've gone up 300% almost. That's pretty impressive. The bad news is you have to own a lot of them to make huge money on that move, because if I owned 1,000 of them, and I would have made 1,000 times a $1 move. Now I would have paid 30 cents for that $1 return, which is great odds, but I only would have made an hour a share, $1 a share. So how could I do better than that? And remember, these are contra ETFs. These are 3 times the movement of the normal market. So I also went, and really just as an exercise for myself, pretty much an equal number of SPXL puts. I went at 90. So I bought 90 puts on this when it was trading far above 90. Excuse me, $100 puts rather. It was close to the money. So I bought back when it was above 100. I bought 100 puts for $2 each. I need the stock to be below 98 for me to make money. So those $2 puts are now worth $7 to $8. If I have 10,000 puts or 100 contracts, and I make $7 on the trade, I make $70,000. If I had 10,000 calls on the SPX, I made a lot less. I made $10,000. So I have to make sure that when I do my investing, I know that, and I try to put in a closer to equal amount of dollars in the 2 trades so that I can get, a similar type of return. So I am very long SPXS. I am very long VXX, and I went long Friday on this during the day, and at my meeting I'll show you the options trade I took. Very little out of pocket, and was able to take some off the table at the close of the market at a $10,000 gain, which funded the rest of my trade. And I'll show you that option scheme at my live meeting. So I've got VXX, I got SPXS, I am short SPXL, I'm short TLT, which is the bonds, which were driving me crazy because those things would just not fall. And I'm not short TLT, I'm long TLT, which is short the bonds. Let me see if I can pull those up here. And these things were just pegged to 140 for the longest time, and they just finally started to move with a big drop on Friday. And of course, this really big low has a much less of a low MACD compared to the prior low, which is a bit of a divergence, which perhaps that says it's going to bounce. So I've been playing these. I'm going to look at TZA if the market's weak. These are small stocks. And you think about what I like. It's got a new person buy and sell signal. It's had huge volume come in on Friday, and it's got a green and a blue over here. So we may look more at those as we go on. Let's jump into HGSI. Also, let's go to Major Markets Plus. This is one of the things that come from Ron. Let's go to T1, which is price and volume, heavily weighted to the shorter time frame. And let's see where the strength is. Interestingly, commodities, volatility, gas, oil, dollar, kind of hard to believe that they were good, but over a 5-day period of time and considering volume, they had a nice move. What was weak was gold, small, mid caps, biotech, semiconductors, bonds, utilities, NYSE. So most of the stock indexes populated the lower parts, especially the smaller stocks. So let's take a look at some of these. S&P 500. So the first thing is, I'll teach you about these two red bars. Actually, there's 3 red bars that are bothersome here. Red bar number 1 is the tall red bar here. This is the Phoenix, and this is a something that Ian came up with some time ago. It's a mathematical calculation. Includes things like the ARMS index type stuff that tells us that this was a sort of the O'Neill follow-through day to the downside. So you don't usually see them. When they occur after a big fall in the market, it's usually a signal that the market's going to go up. When they recur at the height of the market, it's a worrisome sign. Below that is a kahuna. That means that the percent B change on the S&P 500 was over it's dark, so 0.4%. That's a huge percent B change in a given day. The third thing is that my weekly bongo, which is my buy-sell indicator on this S&P that I use on the stock market, went red. Had I been in this long it would have taken me into the market down here at 2075. It would have gotten me out of the market at 2125. So not a big move. You know, I didn't capture all the move, but it would have got me out of the market here on this big snapback. It would have gotten me out of the market here. I have to pay attention to that. So that's more reason for me to have my SOXL longs and my SOXS short position. So actually, let me get this right. Short the longs, long the shorts. I'm confusing myself. I should just show you my TD Ameritrade portfolio. That's the S&P 500. I'm going to leave this on, I guess. Coming out of a squeeze, Mobo breakout to the downside and a kahuna with a bongo switching. You can't like that if you're long. Time to not be so long. Dow Jones Industrials, ditto, weekly bongo, Mobo breakout, breakdown from a squeeze, PSAR reversal, pocket pivot to the downside. The Phoenix, if I called it Eureka, I'm sorry, it's a Phoenix, is calculated on the NYSE, so it'll be the same no matter what I look at because it only looks at the NYSE, and also a kahuna to the downside. So a very weak market here. That was the Dow. Now let's take a look at the NASDAQ. Not as weak. We're still in a buy signal on the bongo. All right, the screen here. But we did see mobile breakdown from a squeeze, a PSAR reversal, a pocket pivot to the downside, and a kahuna. So certainly not perfect and not healthy. And then the Russell 2000, just to keep the story going, a kahuna, PSAR reversal, mobile breakdown, but the bongo is still green. So caution at the minimum. Raising cash seems normal to do at this time, and adding to your short positions probably continues to have merit. I said the dollar, I'm not totally believing it yet. We had a couple-day move. I still got to get above the 50 and the 100-day moving average, which, as you can see, have been resistance for some time. The VIX. When the VIX goes up, get out of the market. When the VIX falls, it's time to be long. There's lots of proverbs, but a rising VIX is not good for your stock holdings. The issue is, does the VIX go up to 32 like it did in the first quarter? Does it go up to 26 like it did in the third quarter? or is it just or earlier in the third quarter, end of the second quarter, or is it just going to reverse from here? Only time will tell. But the rising VIX should make you nervous if you have long-term positions. Or actually, if you have short-term positions. Long-term positions, sometimes you just have to pinch your nose and ignore it. If you look, that's the dollar. I don't want that. If dollars showed a little bit of a move, what would happen to gold? And gold sold off the last couple of days. I still argue it's in an uptrend. It's just below its 50-day moving average. But its bongo, which had been positive for some time, did go red recently. I think I pointed that out before. And silver also 3 days breaking down. So markets look weak. I can't make it sound any better. They're weak. It is what it is. Let's go down to industry groups where we have 171. Which ones are winning? Oh, I hadn't even done that before. Look, because I wasn't really interested in hunting for stocks. Dow futures with fair value are now down minus 143, S&P minus 17, NASDAQ futures minus 41. Now, don't let you think I don't get hurt on my longs. I'm not that smart, because I would be lying to you if I said I got rid of all my longs. I just, for protection, bought a fairly massive position to the short side. The bonds, SOXS, long the shorts, short the SOXL, long, short the longs. The VXXX, because I saw volatility come up. I think I've got some drip. And like I said, I'll be looking to buy some TZA perhaps tomorrow. And I have puts on a lot of my positions. And but that said, I still have my long-term portfolio, which will give something back tomorrow. 5-day ups also. So this tells me that the market was so bad on Friday that there are no groups who's got a positive 5-day force. That means the last 5 days compared to the prior 5 days was down across the board. What's the weakest? I've got 43 groups to the downside. Energy, oil, steel, biotech, banks, all the things that were leading. Airlines. This is a broad-based market sell-off. Now, it's interesting on the exploration and production because some of these don't look so bad. Whiting Petroleum failed here at the 200. Pioneer Natural Resources has been in the, if you look at the last 21 days, it's still up 5%. It's had a massive move up. That looks like it's going to come back down here, at least visit the 50. Hess Corporation, this one's weak. It's the index as a whole. But then you have things like Apache, which broke out this week. Yes, it was on news, but it still moved higher on Friday. So energy is weak as a whole. Oil and gas services, no surprise. Number of rigs has dropped, and you can see Halliburton breaking down here hard. Schlumberger breaking down. So oil services are weak. Telecom carriers, they probably have issues, I would think, with raising interest rates. It makes their dividends less attractive and it costs them more money to borrow. Still pays a 4.4% rate. Now, this is the 200-day moving average. Am I going to have an alert in one of my programs placed that says if Verizon, or what's AT&T look like? If Verizon or AT&T, let's see if it looks similar. Yeah. If Verizon or AT&T come and kiss this 200-day moving average, do I want to start buying some for my long-term holdings? Not necessarily growth stocks, not what I teach you. Sure I do. So I might be looking at doing some cherry picking if things continue to sell off. So telecom weak. Integrated oils, no shocker. ExxonMobil and Chevron, we'll look at those two. Also good dividend payers. You know, my target's got to be about $85 on ExxonMobil. Pays a 3.5% dividend. Chevron, a 4.2% dividend. Yeah, lousy day on Friday. It's got all the red. It's in a weekly bongo red. But if I had a long-term holding of this, getting a 4.2% dividend, it was in a long-term account, I might still hold it. Maybe I am. Or I might be having some puts against it. Interesting, utilities also down. The utilities had a big run. They also are penalized for rising interest rates. Again, more expensive to borrow. They make less money. Their dividends become less impressive as dividends on the bank go up 2.9%. You can see it's been in a downtrend since late June. This is Nextera, Southern Company, Duke Energy, Dominion. They all have the same chart. Now you look at Dominion and Duke, and you know, if this was a stock that I wanted to be long, it's kind of getting to a place where I'd be very interested. Now, I don't know when it's going to stop falling, and I wouldn't be putting a buy order in, but I might this weekend and tomorrow, when I'm not taking long positions early in the day, I might want to start building a list of fundamentally strong stocks that I want to buy on sale, because they may get marked down more, but eventually we're going to have a sale to be purchasing from. Steel and raw materials, you just look at some of the gain some of these stocks have had. Take a look at Cliff Natural Resources. I'm sure your portfolios are full of stocks like this, and that you've had many of your own positions go up 628% over about 6 months. Yes, it's down now from high to intraday low. It's dropped 35%, but this is after just a massive run-up. No shocker as the market rolls over that stocks like Cliff Natural Resources might lead to the downside. Biotech, boy, this has been a tough one. Every time Hillary goes on TV, she talks about biotech and what she's going to do to them. I've made many comments about biotech in the past. I will sum it up in the next few comments. We're the only country that has a free market economy when it comes to pricing drugs. One could argue that it's not really a free market economy because the person paying for the drugs isn't, the patient is at risk for only a copay, and the insurance company is not in the room making the decision. So you've disconnected the pain on the dollars from the patient, put them on a third party that's not there. In 2003, the government made I think a bad decision from a liberal perspective, perhaps, of putting in some legislation that forbids Congress or CMS, which runs Medicare and Medicaid, from negotiating lower fees. So what you have are drugs becoming more and more expensive, but these drugs are funding innovation like we've never seen in our lifetime, and bringing cures that we never saw. So somewhere there has to be a way to balance the pressure on pharma and biotech to reduce the growth in costs, while at the same time rewarding them for the work to be innovators. Unfortunately, the rest of the world isn't going to stand behind us, so it's going to be funded by the U.S. Now, how does this apply to biotech stocks? Let's take Regeneron on a weekly. This stock, well, we'll go monthly, we'll even longer. I have friends that work there, and this stock has literally ran from 38. Let's do this real. Somewhere down here in 2010 to the peak about a year ago, the stock was up 2,491%. It was up not because of the sales of existing drugs, but with the promise of the fortune of selling drugs in their pipeline and the knowledge that you will have great pricing freedom and flexibility. If Hillary comes in and scares Wall Street into believing pharma will not have pricing, then drugs may get cheaper, but innovation may stop, and these stocks are going to get killed. So I think the driver will be every time Hillary says something, but the big driver will occur if Congress changes the ability of the Center for Medicaid Services to negotiate drug prices. I wasn't political there. I was just telling you the laws as I understand them. So Regeneron has been a big monster stock. It's been in a downtrend for a year. Looked like it was going to take off here back in August. Selling off here, failed at the 50. It's coming down to test those prior lows. Interestingly, the weekly bongo is still green because it's still up from where it was earlier this year. Amgen had been a leader, broke through its 50, likely coming down to test the 200-day moving average. Celgene Corporation broke through its 50 and its 200. It looks like it's going further lower. Gilead, this company single-handedly has changed lives for HIV and hepatitis C, curing hepatitis C, and massively prolonging the lives of AIDS patients, and their stock is rewarded with just being clobbered. They got to find a way to get some growth. Negative earnings per share growth isn't good up here. Multiple is small, pays a small dividend. They got a huge cash position. They need to make an acquisition or they'll keep falling. Alexion, also in a downtrend. So hard to get excited about biotech. Banks had a little bit of a move up. And this would be regional and international banks, not our big multi-center banks. But they pulled back to support at the 50. So the ETF that I usually buy in this scenario is KRE when I think it's getting to support. And as you can see, the regional bank ETF really didn't budge much on Friday. So clearly some strength in the banks. So I think it's pretty clear to see that the markets don't give us a lot of places to hide. So let's go back and let's pull up so we get some ideas of what this market might do. So, I mean, to me, the natural destination of this market in the big test is going to occur down here. So this thing's going to move up. So somewhere around there. So, you know, it may be but this is where I'm going to look for a market reversal, somewhere in the 2066 range. So we still have, in my mind, another 5%, 3% to drop on this. If you think about it, if let's say this is where we end up, which is where the 200 is coming to, and we go from this peak down to this area here, it'll only be a 6% drop. That's what I call a normal correction. So I would love to see Friday come or Monday come and wake up and see the futures are up 400 points. And then we get a day that looks like this. I would love to see that. I don't think that's going to happen. What I think we might see is we might see a day starts up like that and then finishes like that. And so I'm not going to buy the first move up. In fact, I'll probably use the first move up to buy more short positions. But let's see what the market does. We're down about 140 Dow points. Be careful. You know, if you've got a lot of margin, you need to raise cash. If you don't have any free cash, you need to raise cash. If you have some good profits in the market, you should be taking some of it off. You should be looking for fundamentally strong stocks and building a watch list of stocks that you might take if this market settles off. And if you, like me, think this market might be going down some and you own a program like HGSI, go into the designer package, go into reference groups, go into component lists, go into ETF components. Let's look at Direxion. So is that what I wanted to find here? So these are what makes up. That's not what I was looking for. My bad. Hold on a second. We don't want the component list. We want the... Hold on a sec. Yeah. I want to start looking at the ETFs that are the Direxion 2X's and 3X's. So I could look in here, find Direxion, and start to look at what they have. I might go in a website. As you can see, the futures here are pretty ugly right now. They still could change by the morning. Direxin. I could go look up Direxion website, and I could get a list of their bullish and bearish ETFs. So here's their 1X bears, 1.25, 2X bulls and bears, and 3X bulls and bears. And then tells you what they are, what their codes, and then you could build your own watch list that you might want to take a look at. Right now, it's where I think is the place to play. That could change by 9:30. So, on that note, I think I'm going to almost say goodbye. Let me just open up. Here was my buy list for this weekend. And you know, I always put together a pretty big list. I didn't have a big list this weekend, so let me just go through it very quickly before I say goodbye, just to show you what I'm thinking. Finisar is one of the rare stocks that was up Friday. Let me get to a normal view here. So it's been in an uptrend. It had a Bible gap up, had a kahuna. Everything looks green above. Earnings came out, I believe, on Friday. Let's check. Make sure it's not a takeout. You know what? I hate this. Let me go into Fit. Let me do FinViz. Finisar are just good news, upgrades. So there's a way to buy Bible gap ups that's safe. I'm just going to have a very tight stop if I bought it. VIX short-term futures, we talked about that. I already have some. Big move on Friday. My concern is it probably will run into some headway around that 50. That 50 is at 41. It closed at 38. That's still an 8% move. Restoration Hardware had some great earnings. This is a stock that has sold off hard. Had a big move on Friday on earnings. Always been amused by their stores. Multiple pocket pivots. Everything is green. I'm not jumping into any long positions until the market stabilizes, but this might be on my watch list. It's got earnings coming back in. Here's a small cap bear, TZA. Again, a big move on Friday, pocket pivot and kahuna in a huge downtrend forever. These are not holding stocks. These are trading stocks during moves. I mentioned Apache, able to stay up on news. Ultra short on the Qs. There's 1X, 2X, and 3Xs. And they're all going to have the same pattern. Big move on Friday with a pocket pivot kahuna. Mobile breakout from a squeeze. Win, lots of positive news coming out from Macau. Easier comps coming. I'll be watching it. I'm not buying anything long until I see what the market does, except for Contras, which feel like going long, but you're really going short. This is SDS. This is, I believe, 2 times the move in the S&P 500. And you could see huge downtrend. Big move on Friday of 4.7%. Kahunas, pocket pivots, mobile breakouts even turn green there. And you notice this thing's been red for a long time. 3 times the S&P. This is the S&P X shorts. And again, the similar pattern. That's one that I've been trading. Liberty Media, don't know this, is a bit of a bottom fish. Obviously, it's a stock that had gotten hammered down here. Nice move up on Friday on a kahuna out of a squeeze. Here's another short, the Qs. I think the other was 1X. This is 2X. Lending tree, too loose to go in. I just liked it. It was sitting here in a squeeze where these moving averages were coming together and had a kahuna. National Beverage, Fizz. No, I'm not buying this stock, but I love the pattern. I love the fact that it just stopped falling on the 200-day moving average. I love the fact that it had a nice up day on Friday with a pocket pivot when the market was down. It's still in a downtrend. It had a nice little double bottom. These are going on a watch list. A watch list. Short QQQ Pro Shares, again, another similar ETF. ING US is an insurer. Insurers are some of the entities that are set to benefit if there is a interest rate increase. They've got some decent earnings. This is just a leader, Market Access. It had a nice day on Friday despite the market selling off. Again, it goes on a watch list. Fabrinet, it sold off hard on Friday, but it too goes on a watch list. And as you could see, I'm not buying it today, but maybe this comes down to the 50 and then gives me a reversal signal, a kahuna. That's what I'll be looking for. Healthways, love the earnings on this. This is a stock that's intimately involved in managing the insurance spend, supports payers. Look at the turnaround in earnings here. Obviously, I wouldn't touch it like that. I'd love to buy that off the 50. It goes on a watch list of something I can watch and see where it ends up. Newfield Exploration, it's a nice trending stock sitting in a nice buy point. Need to see the market hold up, but I watch on a watch list. Same thing with tech. It hasn't sold off as much as Cliff and the others. Look at its earnings per share growth coming in over the next couple of quarters. Again, do I buy it now? I don't buy it now. I put it on a watch list. I might buy it soon, and that's it. Then here's the stocks. This is the one that we bought and then we stopped out of, Cyber. It would be nice to say that all these stocks, not this one, that are sitting here on their 50 like this, and there are plenty of stocks that have this pattern. It would be nice to think I could just buy this and it can only go up. And in an uptrending market, that's typically what happens. We're not in an uptrending market. At best, we're sideways. And we're probably going down, and I just screwed that up. So let me bring back Cyber back. Hold on a second. So we broke through the 50. I don't know where it's going to stop. Do I think this is going higher someday? Sure, it's going higher someday. I just don't know when. And oh, by the way, done this before. Ran up, and then it came all the way back down. So it's in a nice uptrend. I'd like to get back into the stock, but give me a candlestick that shows a reversal. And again, what would that look like for those that are new to the game? A sort of a doji at the bottom here, and then a gap up the next day. That's a reversal signal. A hammer, which is a doji with the open and close at the top, traded down during the day, closed back where it opened, and then the next day it opens up from there. That's a positive reversal. This is the opposite of that. This is sort of a shooting star where it opened up here. The bulls tried to take it higher, and they couldn't, and it closed where it opened. That's a bearish signal. Here's a doji occurring on the 50. This is a high close doji when it got above the high of the price. I'm looking for that kind of candlestick. I don't see that here, and we'll wait and see how long before we get it. So on that note, I wish you happy trading. It could be rough for a couple of days. Again, my expectations and all, what do I know? I'm a doctor. I'm not a broker. I'm not an economist. I did say that expect Fed speak to pull this market down, and that's exactly what happened. Um, I expect that if I was a guessing man, we do this on Monday, which we maybe trade up, maybe we don't trade up, and I'm totally guessing here, folks. Maybe another weekday on Tuesday, and then we start off Wednesday week, and then the bulls rush in. And you know when I start to get excited? I get excited when I take out the high in the prior day. So wait till you see a reversal. Don't know if it's going to be a hammer, if it's going to be a doji, if it's going to be what I drew. But don't just go long because the stocks are sitting on the moving averages. Let the market drive you. Have a great week. Hope to see some people in Florida. Sorry for my babbling. Have a great night. Thank you.